Good economic news, as Mike just touched on, out of Asia seems to be a big positive factor for U.S. markets today, with the Dow and the S&P each up about 2% at the moment. But it's been a rough few weeks for the markets. My next guest says that volatility could be hurting the economic recovery. Jim O'Sullivan is a chief economist at MF Global, and based on data compiled by Bloomberg, Jim is one of the most accurate predictors on the economy. We're proud to call him a Bloomberg best. Jim, it's great to see you in studio today.
Thank you,
So a big rally underway, and as we've been reporting, a lot of that has to do with optimism, maybe a little sense of relief that Asian economies are chugging along. So how closely tied are U.S. market reactions, whether it's data in our country or abroad?
Well, there's a lot of volatility now, that's for sure, so people might even be overreacting to data points. We saw that last Friday with the weaker than expected employment report, and of course the stock market took a big drop. So today the news is good. Obviously numbers are pretty volatile here. I mean, on balance, of course, the stock market's down about, 11% over the last 6 or 7 weeks, so certainly there's been a loss of momentum there, and we probably will see some effect on some of the consumer confidence numbers in particular. Tomorrow morning we get the Michigan number, but I mean, ultimately, if this is the extent of the decline, it's not a huge deal compared with the rally we saw earlier, and I think ultimately the trend in the economy is still quite solid. And
then how will that correlate with the trend for the stock market, because you have to assume volatility will persist?
Well, there's always volatility. I mean, ultimately, if we have an economy which is growing at an above-trend pace, and inflation is very tame, and interest rates are low, I think that's an environment that's generally good for risk assets, which over the long haul should be positive for the stock market. And of course, that has been the right story over the last 15 months or so. But again, there can be lots of volatility, of course.
Let me ask you this, as an economist, what's the best way right now to describe the U.S. economy? We had the disappointing May jobs report, but then we had the Beige Book, where the Fed reported all districts showed modest growth.
I think the economy is improving. I mean, clearly recovery is underway. We're seeing above-trend growth, probably something on the order of 3.5% in terms of the trend. That's been the trend so far in GDP, so far in the recovery. The employment report in terms of GDP implications was actually quite strong. Hours worked were up again in May. They're up at a 4% annual rate so far in the second quarter, and you throw in any productivity at all, and you could be looking at a 4% plus GDP number for Q2. So the numbers are volatile. The weakness in payrolls ex census in May came after a very strong April number. You average it out, and the trend is up. And certainly the Beige Book was consistent with an improving trend, even if the wording in there was a little understated.
Sovereign debt concerns out of Europe. The Fed chief said they should have a modest impact. How do you view it? Do you agree with him?
I agree, and I think the way he worded it was quite accurate, that if the markets start to stabilize here, if this is the worst of it is over, then the impact on the U.S. economy should be pretty modest. Certainly the export impact, as Michael was talking about earlier, in terms of the trade-weighted dollar not being up a lot, there's not a huge impact there. But the wild card, of course, is do we get a re-intensification of the credit crunch? I
was reading your latest note on your growth forecast. Getting back to this, you increased your second quarter to 4% from 3.5%, but then lowered the third quarter to 3% from 4%. So our growth rate's going to be as volatile as markets here in the near future.
Well, 4 to 3, it's not a huge jump around. I mean, fourth quarter was over 5, and then you're back down to 3 in the first quarter. And in truth, the trend isn't changing that much. There's volatility in GDP even on a quarterly basis. Something in the 3 to 4% range, I think, fairly characterizes where the economy is right now.
And I wish we could get to how that will translate into job growth, if at all. But unfortunately, Jim, we've got to leave it there. Quick comment on that? Yes, no?
Well, the trend in jobs is up. The last 2 months, ex-census, 122,000 a month. The trend is improving.
All right, good place to leave it. Jim O'Sullivan, MF Global Chief Economist and a Bloomberg best.